SEC Chair Gary Gensler yesterday at the Aspen Institute said that he wanted to move forward with regulating cryptocurrency, but there were some holes that Congress still needs to fill. Welcome now the former head of the SEC, Harvey Pitt. He's the founder and CEO of Colorado Partners. So Harvey, welcome back. Great to have you here. Give us your sense from your perspective. What can Mr. Gensler do under existing law in the SEC to regulate cryptocurrency, ETFs, things like that, and what can't he?
I think there is a fair amount that can be done with respect to what are referred to as initial coin offerings, which take the form of actual investment offerings and securities. I think that there are a lot of questions with respect to some of the instruments that are being sold, markets that are being developed, and there's a need for greater clarity, first in terms of what the SEC believes it can do, and second in terms of what Congress will need to do. But there's a clear need for legislation here.
We talked with Elizabet Warren, the senator from Massachusetts, earlier in this hour, and she said we need a cop on the beat, was her expression. Is it clear who the cop would be on the beat? You referred to the SEC. Is it clear it's the SEC, not the CFTC or some other regulatory body?
Well, it's not clear, and it could be the SEC, it could be the CFTC, although I think that's less likely, or it could be the Treasury Department. The difficulty is that cryptocurrencies in some forms are like securities, but in other forms they're like currency, and the SEC and the CFTC do not regulate currencies.
Let me ask about enforcement, because that's something that Gary Gensler talked about. The possibility of really going after enforcement. They have various things that they're initiating in the SEC. Suppose that someone does engage in the selling of Bitcoin or some other cryptocurrency, some sort of cryptocurrency, and misleads people about it. Is that potentially a violation of securities laws?
Well, it depends on what they're doing, but the difficulty here, I think, David, is regulation by enforcement tends to be the least effective way to make new rules of the road. I think most businesses will follow whatever they believe the standards are. So you need someone to clarify what the rules of the road are, and then you can enforce those rules when people violate it. But trying to advance the law through enforcement cases can lead to the SEC being told it lacks the authority to do what it's trying to do, and that would set back its program instead of advancing the protection of investors.
Harvey, when I think about the SEC, I think about responsibility to protect investors and also protect the system overall. Is there another aspect of this when you're sitting in the chair, as you have done? Is there an aspect of, do we need to be competitive internationally? I saw that Singapore now has approved the first exchange for cryptocurrency, reportedly because they want to compete with Hong Kong. Do we need to worry that, for example, New York will get left behind?
I think we do need to worry about fair competition, and it is critical that our rules not stultify innovation in investment markets. So the fact that other countries are allowing exchanges or marketplaces to spring up for cryptocurrencies is important. We have had some of that here in the US, but the status of those venues is still unclear because the question of the SEC's authority is unclear.
Oh boy, yes, there's a lot going on, and Gensler is a huge part of it. I'm surprised he hasn't acted more up until this point. He's been in his role now for several months, and if you go back to his confirmation hearings, he was asking Congress for clarity. And what came out of yesterday's speech is that he's taking some positions in spite of the fact that Congress hasn't acted. So there's a jump ball going on. Is the SEC going to interpret its authority more broadly and start taking enforcement actions? Or is the SEC and, of course, other agencies in Washington going to wait for Congress to give them instructions? But very clearly something's happening. And I must say his video is interesting because consumer protection is at bottom one of the big concerns. There are bad actors in this sector. There are institutions that are doing things that, had they registered onshore in the United States, would be considered illegal and they would have been shut down already. But they're operating overseas, offshore, and in many cases actually serving Americans.
Yeah, it's interesting because you talk about maybe what they can do without getting more powers here from Congress. And one of those is kind of labeling what is a security and what's not. And he kind of waded into that. He didn't want to get into specific tokens, but I just want to read what he kind of had in his prepared speech there on that topic. He said, folks buying these tokens are anticipating profits. There's a small group of entrepreneurs and technologists standing up and nurturing the projects. I believe we have a crypto market now where many tokens may be unregistered securities without required disclosures or market oversight. This leaves prices open to manipulation. This leaves investors vulnerable. I mean, that is kind of what you're talking about here, investor protections. But there's a lot out there beyond Bitcoin and Ether. And you think about the exchanges being impacted here, maybe what you guys could offer being impacted. I mean, talk to me about how big that is and how hard it is for people to agree on what is a security and what's not.
Well, it's so interesting because the SEC almost 2 years ago put out guidance that was supposed to clarify this, and it's clear as mud. And the industry has been saying, we really would like to have clarity because we want to know where the guardrails are so we can stay within them. In most cases, the compliant actors are interested in staying within those guardrails. And that was one thing I disagreed with Gensler's speech yesterday when he said this is clear. It is not. It is clear as mud, and it does need to be further clarified. And what's happened is the SEC has taken the stick approach as opposed to the carrot approach, which is to use enforcement actions and sue the issuers of these tokens that may not have clarity. And instead, what the SEC should be doing is enabling the innovators who are trying to protect consumers and are not trying to defraud anyone by providing enabling guidance. And that is not what the SEC has done.
So there may not be more clarity right now, but it does give us a little insight into Gary Gensler's thinking. And this morning we heard him say that, look, if you look at the crypto exchanges, they're just not under the same regulatory regime like a New York Stock Exchange, for example. I'm just curious if you think that they should be. Should they be treated as the same, or do you think there are separate tracks that need to be pursued?
Well, for exchanges in particular, there is really no regulatory regime for them. And again, most of the ones that are actively trying to do right are asking for clarity. They're not trying to evade the law. There are some offshore, of course, that are, but most of the onshore ones are not, and they do not fit within existing broker-dealer rules. We saw Chairman Powell testifying at the House Financial Services Committee a few weeks ago, for example, say that one corner of this industry, which is called stablecoins, stablecoins are US dollar equivalent tokens, and that they should be either regulated as bank deposits or as money market funds. But the problem is they don't fit within money market funds right now. The Federal Reserve has the ability to fit them within bank rules right now. They don't need Congress to act. It's very interesting that the Federal Reserve has not done so. They're not eating their own cooking. They're not living up to their own words. But the SEC, I think, does have its hands tied more than the Federal Reserve does on going ahead and saying, yes, here's how exchanges should be regulated. I think both the SEC wants to do that and the exchanges are expecting it. The problem is it doesn't fit within the existing laws, and they need Congress to act. And we see what's going on up on Capitol Hill. It doesn't seem like anything's going to happen anytime soon.
Yeah, in that appeal for powers, he kind of laid out also a focus on not just kind of the tokens themselves, but now the institution, the crypto platforms that are kind of lending and allowing people to tap equity in their crypto holdings, and we've seen pressure mounted on some of those other protocols too. I mean, when you look at that space, did that catch your eye for something that maybe Gary Gensler would have high on his list of things to talk about, and maybe the issues that we've talked about, you and I, before, when it comes to those lending platforms not necessarily having any oversight there either?
Oh boy, that was the clearest shot fired, if you will, in Gensler's speech. In my view, there was a one-line reference to crypto lending platforms, and it didn't mince words. It said if crypto lending platforms are engaged in securities activities, they are running afoul of the law. It's interesting because we have seen enforcement actions by state securities regulators. I think now we're up to 5 states in the last week or so against one of the crypto lending platforms in the United States. But the SEC itself has not gotten involved, and yet Gensler had that one line in his speech. It does seem that there's coordination happening among the regulators. It is worth noting, though, one of the things that I think is difficult for folks who haven't been around and don't have the proverbial gray hair to understand is that the SEC has 5 years to go after bad actors here. They can take their time, whether you think that's fair or not. That's what the law is. And in the case of the Ripple lawsuit by the SEC, it took them 8 years. And the reason that they kept going for 3 years after the statute of limitations expired is that they had apparently agreed with Ripple to toll the statute of limitations to give themselves extra time. I actually think they need to act. I don't think those kinds of behaviors are helpful. To sue someone 8 years later over something that might actually be a valid dispute. The law is not clear in some of these areas. But the SEC, just because they have not acted yet, it absolutely does not mean they won't. I think they will. They take their time and they get their ducks in a row first.
I think that's a good way to wrap here with the last question. And, I guess this might be veering a little bit outside of, what we normally ask you about, which is just kind of the price moves, just because of what we're seeing, Bitcoin and Ether seeing a pop. Of course, that's kind of been settled when we think about how the SEC might look at them as not securities. But it's interesting to see the rest of the tokens and the rest of the space still in the green as well. And we know they're kind of linked. But if anything we got from yesterday, it would seem that they shouldn't be linked. And I guess, the question there would be what you make of the moves that we're now seeing in kind of investors, maybe putting the weight on what you just said, that maybe they take this to mean we're in the clear here because the SEC hasn't done anything yet. So maybe it's going to be fine.
Well, I think some of it is in the price. It's hard to say how much, but it is true that Washington, D.C. has been telegraphing a big regulatory crackdown. It actually started on the day that Tether released its reserve asset allocation back in April, which, by the way, was the peak in Bitcoin's price. And at the time, I said that's not a coincidence because a lot of the big smart money at the time, you saw analysts telling their investors, get to the sidelines, there's a crackdown coming, and wait until it happens and then get back in. And indeed, that's kind of what the price action has telegraphed. But I think more interesting than the price action is the volume. The volume has collapsed as it's clear that certain of the intermediaries in the sector are definitely in the crosshairs and others are more likely to be clear. But again, until that all shakes out, I don't expect the volume to come back. But the price action, a lot of it is a function of scarcity, and that has nothing to do with regulators at the end of the day.
Another topic also that's very hot, which is cryptocurrency. We heard from Gary Gensler, the head of the SEC, just yesterday about the possibility of an ETF for cryptocurrency. Let me start with the most basic question from your point of view, because I know you've spoken out about this. What should U.S. policy be toward cryptocurrency? Are we for it or are we against it?
Look, I think that's actually not quite the right frame, David. The way I think about this is that if people are going to be out there trading in it, there needs to be a cop on the beat. Because when there's not a cop on the beat in any market, then it's the small traders who get cheated. And that's what always worries me. So right now, for example, if you trade in stocks, you know that pump and dumps are illegal. You know that a broker has to come through with what the broker promised, and you'll be insured if the broker runs away with all the money. Those are things that are not there in crypto. So this is about putting some basic rules in place so that anyone can trade with just some basic confidence that the biggest kinds of scams will have a cop on the beat to blow the whistle and put a stop to it.
And that raises the question of who is the cop on the beat, or who gets to decide who the cop on the beat is? I mean, is it the SEC? Is it the CFTC? Do we need you up in Congress to tell us?
I think that's a good question. And the answer is right now, we don't have any cops on the beat to speak of. And there are going to be, I think, a lot of different approaches. So Gensler is now talking about what the SEC can do. But there are other spaces for other actors depending on how you think crypto plays out, whether you see it as a currency, whether you see it as an investment. That means you really put it back on Congress. So ultimately, I think it's important for Congress to do its job, but in the meantime, I think it's important for each of our regulators to step up and take hold of the piece that's within their jurisdiction.
So, Senator, you understand this area so well. From your point of view, give us a sense of what the biggest advantage, the biggest upside to cryptocurrency is, and the biggest risk to cryptocurrency.
Sure. So the biggest upside to cryptocurrency could be expansion or democratization of access to the financial system. You know, right now in the United States, we have tens of millions of people who are either unbanked or underbanked, which means they have to go to check cashers and pay 3% of their paycheck just to get their cash. They have to pay money in order to make a payment on their utilities or to pay their rent payment. And that's costing those people a lot. It is possible that moving to a digital currency system, or I should say expanding to a digital currency system, could bring in more people. And there are a lot of different ways that could be designed. The downside, of course, is so long as it's an unregulated system, you may be pulling more people in so that they can get cheated. And that's not what we want.
Senator, I think I understand the possible risk for the consumer, the person who puts their good money into crypto and who knows what happens to it. What is the macroprudential risk? What's the risk to the system overall at this point? Is it broadly enough used that it actually could jeopardize the system?
So do you remember money markets back in 2006, 2007, 2008, and how much money flooded into money markets because the banks were paying like nothing in interest on money and on savings accounts, and the money markets were saying, hey, put your money over here, we'll pay a little more and give you all the benefits of a checking account. And then the crash came, and folks wanted to withdraw their money from those money markets. And we had one of two choices as a federal government, as a nation, and that was either let the money markets crash and drag down the entire financial system because they had become huge, or force the taxpayer to back up those money markets so that they didn't take down the economy. You run the same kind of risk right now with crypto. The bigger it gets and the more it stays outside the financial system, something goes wrong, there's a run on crypto, there's a problem elsewhere in the economy. I don't want the U.S. taxpayer to be the one who gets called on to back up another financial system again.
When we talk about risk to the system overall, obviously we think about the Federal Reserve and its role, because it's not only a supervisor of monetary policy, but as you know better than anyone, it also is supposed to be regulating the banks. As we look to the expiration of the first term of Jay Powell, the chair, what should we be emphasizing, monetary policy or regulation?
Look, I think they're both important. And here's the thing, you can get somebody who's good on monetary policy, but they could also be good on regulation. I want somebody who does both. And I've raised concerns with now Chairman Powell since he was nominated about his attitude toward regulation.